Alright then, 80% win rate strategy. Going to show you the strategy really quickly, and then I'm going to show you examples of trades that I took last week on the charts. Got around an 80% win rate last week as well, which was good to see. And I'm just going to show you what it is. So like and subscribe, it really helps out the channel. Thank you very much. And if you do want to get signals and alerts, you can get them below in the description. So very, very simply, what I'm looking for is, this is just on MNQ. I trade MNQ, which is just the NASDAQ 100 micros. And as you can see, this is the strategy. Very, very simple stuff. Say this is your market structure. And basically all I do is I'll just go and I'll mark out all these major swing lows like this, with this little line. Very, very simple stuff. And basically my strategy is I'm looking for big liquidity sweeps like this, followed by inversions back to the upside of fair value gaps like this. Very, 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 very simple to find on the charts. All I do at the start of the day is I'll just go find my major swing lows, set alerts at them, wait for price to hit them, and then see whether or not I can get an inversion back to the upside. So for example, we come down, we get our major liquidity sweep like this of one of these big obvious lows. The more obvious the better, and you want to gauge the reaction and see what happens. You're looking for an inversion back to the upside like this. So say for example, these are your candles. You're looking for these 3 pattern V shapes. They're the best ones, but you can have 4 pattern ones as well. So say for example, these are your candles. You get your liquidity sweep like this. This is your major low, and then what you're really looking for is a big candle back to the upside like this, where you come back up. You can see we've formed a fair value gap here. A fair value gap is very simply a 3 candle pattern like this, where you come down with such momentum that you basically create this gap in the market with the middle candle, as you can see. And then this would be your 3 pattern V shape. You can see 1, 2, and then 3, which comes back up with loads of momentum, closes back above the gap. This would be your most ideal trade to take. These are the ones that work a lot of the time with a really high win rate, and they tend to be what I wait for the most. And then for my entry strategy, which is a little bit different to other IFVG traders, because I know IF, inverted fair value gap, IVFG traders, because they all have their own different ways of entering and exiting the market, but mine's a little bit different. So I usually risk about $100, $150 per trade per account, and I copy trade across a lot of accounts. And then what I'll do is I'll enter on the inversion. My stop loss is a manual stop below the fair value gap. I'll size my trade for about halfway between the low and the gap to give myself a good amount of time to get out if it goes against me, for my actual risk, and not just like having my stop loss sized for here and then getting stopped out down here and losing basically twice as much as I wanted to. So I'll size for about halfway between the low and the gap, and then I'll very simply just target a 1-for-1 for my first TP every single time, which is about $75 if I'm risking 150. Once we hit that, I'll scale half of my position and go break even, which means I've made a little bit of profit on the trade, and the rest of the trade is basically allowed to do whatever it wants. I've basically scaled a little bit of money out of the market, and then I'll just let the rest of it basically play out to the upside, hopefully targeting back up through levels of liquidity back to the upside. So say for example this was this trade here, I would enter on the inversion, and I'd basically go target a 1-for-1. The 1-for-1 would get hit, which would be here, and then I'm looking to target back up through this V shape, usually back to the obvious highs, and then I might leave one more runner to the upside depending on how much size I was allowed to use with the amount of micros. And this is basically the strategy. It's really, really simple, honestly. I've had so much success with this over the past year. It's really been incredible, and I'm just going to show you a few examples on the charts of some trades that I took recently. So if we take a look through the charts here, it was a bit of a weird one last week. I didn't actually take that many trades. I wasn't trading on Friday, but I noticed that there was a pretty good trade on Friday. If you look here on the 5-minute time frame, really, really obvious area of liquidity being swept here. We came out, we swept this low, this low, this low, and then this low down here as well, if you look. And then on the 5-minute here, you can see exactly what I'm looking for. We've created this fair value gap, as you can see. Really, really obvious fair value gap here on the 5-minute. This was a trade that I saw, and in hindsight I definitely would have taken this, because honestly it looked really, really good. As you can see, we come up, we didn't get we didn't actually get the 3 candle pattern V shape, but we got 4, which is almost as good. And you can see there's good momentum here. We've got the fair value gap being created, and then in the next 2 candles bouncing back to the upside. And very simply here, if you look at this one, you could have entered here on the inversion. Stop loss halfway between the low and the gap. Sized, I would have been sized for only about 1 micro on this one because it would have been such a big stop loss. But you can see this would have gone for a 1 for 1, actually for a 2 for 1 here before it retraced. And since I would have only been able to take this with 1 micro, instead of scaling half and going break even, because obviously I would just close the position, I would essentially, once we get up to 1 for 1, I just start trailing my stop loss usually, but underneath the next 5-minute candle. So as you can see here, we would have got to here. This would have been the 1 for 1. I would have started trailing underneath this, and then I would have managed to trail this probably, as you can see, up to maybe, probably not quite, I probably would have not trailed it for this one just because of how bullish it looks. I probably would have got up to around, in reality, a 1.5R or something along those lines, because I would have only had 1 micro. I wouldn't have wanted to close it straight away. I think there might have been some losers on Friday, but because it was OPEX, which means there's all the contract rollovers and stuff, you would have been basically having to be quite conservative, I would say, with your trades, because you wouldn't want to be getting stopped out on some stuff. There's some stuff here, as you can see, there's at a 1 minute. I noticed on, obviously, there's quite a lot of chopper open. We started to come down. I think we got a sweep of a low here. I know we didn't get any sweep of a low here, so I wouldn't have taken a trade. The sweep of the low was this one, which was one that I think a lot of people that I saw on Twitter and stuff lost on, which was this really obvious fair value gap here. You can see, obviously, people could have entered like this on this, targeting your 1 for 1 for your first TP, and you can see this immediately reverse back around. A little bit of a unfortunate one. Obviously, you can't win them all, but I think because of OPEX and just because of how much we were trickling to the downside here, it's a bit of a risky one, I would say. I probably would have waited for a bit more confirmation on higher time frames, because as you can see, we basically came back around pretty much instantaneously. We did close above this 2 minute as well though, which would have been extra confirmation. As you can see, this probably just would have been a loss for some people, but the 5 minute would have worked if you'd have stayed in the markets for a little bit longer and taken this after a few more major sweeps. And obviously the higher time frames, in my opinion, they hold more credence than the lower time frames do, because obviously they take longer to form. They've got more data and more orders infused into them, so they carry a higher weighting in terms of potential reversals. So when you see a reversal like this on the 5 minute, it would probably carry more credence than the 1 minute would do, in my opinion. And it's good if you're not sure about whether or not you're going to get the reversal, that you can wait for all the time frames to close. So the 1, 2, 3 and 5 minute are the main ones that I use. If you wait for all of those time frames to close, you've got much more of a chance of the trade working, because you're confirming the order flow is reversing, rather than just, you know, maybe like the 1 and the 2 minute close, but the 3 and the 5 minute don't, and then all of a sudden you're getting rejected out of that fair value gap because of those, and then the trade loses even though it's closed on lower time frames because of that. That's something that I've noticed quite a lot, and sometimes you do have to be wary of the fact that there are other time frames that could potentially close and work against you, if you know what I mean. There's actually a trade here which you could have potentially taken. So there's something else that I also take into consideration. I've obviously talked about the major liquidity sweep one, where let's just say, for example, if we can actually draw some market structure here, you wait for your major liquidity sweep, and then you're looking for your inversion like this back to the upside. But sometimes you can also take, in my opinion, the 3 candle pattern V shapes are a very strong signifier of trades, of price reversing, and can be good for trades. And sometimes you get them where you've got your prices kind of grinding to the upside, or forming AMD where we're going sideways, and then you'll suddenly get your accumulation, manipulation, distribution. This one sometimes plays out, and I've seen 3 or 4 of these over the past few weeks that have worked out really nicely, and this can be a sign that you can also take a trade. And if you get, as I said, these 3 candle V-shaped patterns like this that are really, really strong indicators that the market wants to reverse, especially on higher time frames like the 5 minute, you can be in for a decent trade. So I've seen a few of these recently. If you take a look here, there's a few 3 candle pattern V shapes on the 5 minute here. If you take a look at them, this one here looks really quite juicy. As you can see, we've got the price is grinding to the upside here. As you can see, we come down, we sweep a little bit of liquidity, We do get a minor liquidity sweep, but because of the V shape and the 3 candle pattern on the 5 minute, this would actually look really juicy. And I actually took a trade like this a few weeks ago that worked as well. But you could see here that this would have worked. You've got your, obviously, as always, targeting a 1-for-1, as you can see here. Sized for halfway between the low and the gap. Stop loss is down here. You can see this would have hit a 1-for-1 and then perfectly come down and break even me before going and actually losing. So this is one of those instances where the break even would save you. But this would have been a small little win of $75. And then instantly straight after here, we've got another one which looks potentially even better, really, where you've got your really obvious area of liquidity. All these lows here getting swept out, as you can see. Did we sweep this low? We just missed this low down here, but we did sweep a few lows. And then you can see, again, you've got your V shape here coming in. This one's not quite as clean as the other one, but you can see, again, this is just on the 5 minute. I give these quite a high credence, as I said, because obviously it's pretty obvious to me. If you come down and sweep some liquidity and then instantly reverse on the 5 minute, you've got a pretty good chance of these trades working out, because the 5 minute does hold a lot of weight. And as you can see, this would have been another one that would have been a scale break even trade with my model, which would have worked as well, which is totally fine. Like, you can't all hit an absolute banger with every single trade, can you? So we're taking a look here. I remember Thursday was a really bad day for me. I looked at this chart and I was like, this is a horrific price action. We did get this 5 minute off of open here, but I didn't take this because there wasn't any major sweep. You can see we came down and pretty much made equal lows, and then came back to the upside. This wasn't something that I would have taken because we're so high in premium here. There's a very low chance, in my opinion, of this working. It would have taken, as I would have said, coming down and sweeping a low down here and then getting a reversal. But with all of this chop here, I just wasn't really willing to take any of this. I don't think, let me look here. I don't think really there was anything that was worth taking in this area. It was just all very bad. I mean, look at this price action. This is horrible. What you want to see is, you want to see your price V-shaping like this. But this is like, we've come down, we've kind of trickled to the side for a while, and then we come down and sweep, and then we start to reverse. It's just, it was all bad price action on Thursday, and I wasn't really willing to touch it. So I remember looking at that and thinking, oh, that was annoying, but not something that I would have been trading. Wednesday, what was Wednesday? Wednesday was the day where we were getting this continuous bearish impulses to the downside. You can see on the 5 minute here that we were basically, you know, printing to the downside. There was a 3 minute in here that you could have taken, and there was also a good trade down here as well. Let me just go on the, I think these were both 3 minutes actually. So as always, you obviously were consolidating before open. We come down, we push to the downside, as you can see. We're creating some nice gaps. We've got a major liquidity sweep of a ton of liquidity here. I mean, look at all this liquidity that we swept. Really, really good place to be getting a bounce. Did we even take this low here as well on this first impulse? No, we just missed that one, but that was the next impulse. But you can see lots of major lows swept. So we're looking for longs, as always. Creating this really obvious 3 minute. Obviously, this took a little while to inverse. But you can see with my model, this would have worked for a 1-for-1. And then, sadly, the rest would have got break even. So another $75 one. I would have took this with about 1 micro because of the size. So I only risk 150 per trade as always. But you can see here, pretty obvious scale and break even on this one, which is fine. And then we come down again, as you can see, for the next push to the downside, swept that next major low that I just talked about. And then as you can see, we never really got any kind of impulse to the upside for another trade. And then very interestingly, as I talked about earlier, we came down and we've swept so much liquidity, haven't we, to the side. All of this liquidity here, loads and loads of lows being swept. And you just start to think, okay, well, we're probably going to get a reversal because we've just swept so much liquidity and gone so low. And then we formed this really obvious accumulation. This was really obvious in real time for me, where we're kind of going sideways like this. And I'm thinking, okay, well, if we sweep the low again, I'll probably take a trade back to the upside. And then take a look at this. We've got this big obvious fair value gap. We come down, and then it takes a little while to inverse, to be fair, so it's not as clean as you would like. But you can see here this comes up, hits the 1-for-1, and then I'm thinking, okay, I'll just because I could only take this with one micro because the sheer size of the stop loss. I basically took this with 1 micro, and then once we started to go sideways here, I basically just decided to take the 150, which is basically the, you know, when I'm risking 1-for-1, 150, 1R is 150. Took the win along with the 75 that I made it earlier, which was like, you know, 225, about $200 on the day for a win, and that was it really for the Wednesday. You can see here we actually came back up. We flipped order flow bullish here. I think there was a Trump tweet that came out at 8, or he was having a conference or something. And there was a few continuation plays you could have taken here as well. You can see we've confirmed that order flow is bullish. There's a 2-minute and a 3-minute here that I remember that you could have taken. These are obviously not the model that I take. I always wait for a major sweep and then a long for the highest probability. But you can take these continuation longs, and they do work sometimes like this. You can see even this next one would have worked as well. And that was Wednesday. When you wait patiently for those good trades, you can get yourself a good win rate. I saw a lot of people struggling last week in general, but there are plenty of good trades on offer if you are willing to wait. Tuesday was a really, really weird day in terms of price action. Pretty crazy delivery in general. If we take a look here, I'll work backwards through the trades. Really, really great. Actually, no, let's do it chronologically. So we had CPI, didn't we? CPI pumps us up. Some people would take these, like there's a 2-minute and a 3-minute long here. I wouldn't have taken this. You can see it barely missed the high and then reversed, which is really bad delivery. You would expect this to take that liquidity before reversing. And then we grind all the way to the downside. I'm pretty sure that there was a trade in here on the 1 minute. Let me just... I always like to circle them because TradingView does that stupid thing where it doesn't stay with where you are. Yeah, this 1 minute here was absolutely insane. So, obviously, as I said, we've got CPI, pumps us up, we retrace, we're looking for the long. Well, people are looking for the long. They come up, they miss it, and then we grind all the way down. There was actually this really good A+ 1 minute long here that failed that I took. That was a loss. The only loss that I took last week. You can see this was a pretty good trade. We've come down, we've swept out this liquidity of the CPI candle, which is a big news candle. We've come down and we've swept out a decent amount of liquidity here. And then you can see we've got our 3 candle pattern V shape, which looked really nice to go back to those highs that we missed. And then it just failed. And then I lost about 150 on this, which is fine. And then, okay, we're thinking, well, we obviously need to go lower then. If price action is not reversing from that sweep, we come down, we sweep this level, this level, this level. We're coming down, sweeping through all these major lows, as you can see. Really, really obvious stuff. We're coming down, all the way down, and we sweep out some really, really decent lows down here. And then we're starting to consolidate. As I said before, this happens sometimes where you have a big dump. You start to accumulate. I don't know how on earth I just opened that. Start to accumulate here, as you can see. In hindsight, a pretty obvious sideways accumulation. And then you can look at this. We come down, we sweep the low, and this is an absolutely beautiful 3 candle pattern V shape. Look at this. Small, massive candle, small candle, and then a massive reversal candle. This is basically the best signature and price that you can have for an inversion. Something like this, and then a massive candle back to the upside over it. This is basically the best thing that you can look for in the market. These have such a high probability of working because it's so clearly a manipulation to take a liquidity level and then a huge impulse out of it, showing that you want that order flow wants to reverse and we want to get a reversal from that level. This just looked absolutely amazing to me. And you don't get these very often because obviously they're quite hard to find in the market, but when you see something like this, they have a really high probability of working. So basically, I took this, as you can see, I probably took this with 1 micro in reality. I could have taken this with 2. I think I did take this with 2 and I just took the risk because it looked so good. But as you can see, came up, hit the 1-for-1 pretty much straight away, took 75 off there. And then I trailed my stop loss on the second one throughout this area here. I think I got up to about a 2-to-1 and maybe a 2.5-to-1. Made about 250, 300 on this trade per account. Really, really good. And then as you can see, we've got this ridiculous scam wick that we saw here. And then we just continued to the upside massively. This was to do with Nvidia, I think. But basically a really, really good trade. And then there was another good trade in the PM. When we came down, we swept liquidity again here. And then we actually had a 3-minute in this area. If we take a quick look here, you'll be able to see. If I can actually not just butcher my chart. Pretty obvious area at 3 minute, where basically we just came back up three candle pattern V shape through all of these candles here. As you can see, after sweeping liquidity, bullish reaction, definitely good enough to take a trade. Closes above, stop loss as always, 2 micros there, scaled, it's sized halfway between the low and the gap, and then targeting 1 for 1, 1 for 1 gets hit. Take half off at 1 for 1, $75 locked in, and then trailing the rest of my stop loss up to the next high. Once we hit this high, I was thinking, okay, we definitely could be hitting more here. This is about 150 on 1 micro, isn't it? And then I'm basically just trailing my stop loss here. I got up to around a 3 to 1 on this, so another $200, $300 trade. Definitely done for the day there, making around $500 on the day per account because of consistency. Basically, absolutely insane strategy. I'm going to leave it there because I don't want to waffle on too long. But basically, been having an absolutely incredible time recently trading this, despite the fact that the markets have been pretty choppy. As you can see, we've been going up and down and up and down. But there are always opportunities in the market to be trading. And I really hope that you learned something from this. So if you do want to learn more about this strategy, as I said, you can sign up to the WOP, which is the private Discord down below. You'll get access to the full strategy, and me, I'll be showing you all the alerts and signals of the trades I'm looking at and taking every single day, and all the levels that I look forward to trade from. And please do like and subscribe and leave a comment, because it really, really does help out the channel. A single like can send this video out into the ether to more people that will probably want to watch it. So please do that, like and subscribe, leave a comment, let me know your thoughts, and let me know your questions down below. I'm happy to talk to anyone in the comment section, and I'll catch you in the next video. Cheers.